which is a first webinar of our trading academy, which we decided to start to do with a 360 Capital and with cooperation with me. So in today's webinar, I will show you the basics of my approach, how I look to the markets, what I think is important, but as also it will be a little bit more about trading psychology, because I think that this is a most important thing in a trading, not just to finding the correct strategy, because in my opinion, and after almost 10 years of my experience, I really know that strategy is not creating a trader, but trader is creating strategy, and mainly the psychology is the everything. So I will just, in today's webinar, I will touch a little bit of the trading approach, but it's not going to be too much about explaining how the market works and this into the details, but as I would say, I would more explain how to start a trading journey, how to create a plan to learn it, learn these great skills which can really change your life. So here is something what I was talking right now. So we will look a little bit to my background, so you know who I am, right? So I actually started trading back in 2013. And since then, I was fighting on these markets, right? Then I worked in the Cyprus broker, because I thought that that would be the best thing to do to get job in a broker, because I could be close to the charts every day, and being able to learn it like that. So then started be a bit profitable back in 2017. I thought that I'm already winning, that everything is great. However, I quit job, and then I lost the money, because, as I said, the psychology is really hitting, and when you are dependent on your income from the trading, and you are in the beginnings, it doesn't have to work really. So then I found a job in another broker. I stayed in the Cyprus, because there was a lot of brokers, so there was always opportunities, and spent another 1 year in the broker and trading, and been trading secretly, because it wasn't allowed to trade when you are in the broker, when you're working in the broker, but I've been doing it anyway. Back in 2019, I won a trading competition. Trading competition on the Forex Factory, which is one of the biggest forums. Currently, I am number one on the MQL5 as a signal. I gained it over 10K percentage in the last 4 years, right? I'm also a licensed money manager. I've been consistently ranked in the top 10 traders in the trading view, and I'm developing software for the trading. I'm also father of my daughter, and I think I will be forever a humble student of the trading, and also the psychology and personal development, which is, I think, very necessary to do and live such a lifestyle when you are a trader. Here is just to view some results from the MQL5, where I'm, as said, currently number one, and gained over 10,000 percentage gain in the 231 weeks. So that's a history for more than 4 years of the profitable, consistent history. All right, so let's go to the next slide. And yeah, it's a deeper look into my account. As you can see, obviously, I'm not winning every month. Also, the tradings are part of the trading. However, the month is not saying anything. Important is how you close the year. And past 4 years, I've been able to gain around 100%. Previous year 400, then 400. As you can see, last year I a little bit reduced the risk because I thought that the war and these things can be dangerous. However, it wasn't that much. So anyway, profit is profit. So it's still good. Okay. So what is my trading approach and how I learned the trading, right? So everyone of you probably knows the many indicators and the trend lines. You probably tried that, right? I've been trying it also, and I was thinking that I will find some magic formula on the RSI or MACD and any other indicators, right? And I was thinking like when you have breaks somewhere on the charts, and these indicators are in overbought and oversold, right? That it could be a great entry. I don't say that, and I do not want to say that any trading strategy is bad, that my is better or whatever. But in my opinion, these things are not working because it's very subjective. One time you can draw the trend line like this, second time like this. There is a lot of things. Also, this MACD or RSI price, it can be in the overbought, but still price can be going higher, right? And you would be selling against the trend, right? So these things are actually just the equation that turns specific data from the charts into some kind of maybe easier readable things, but this never tells you where the price will go next, right? So after the maybe 2 years, I really completely avoid this. And as said, I'm not saying that this is not working. There is definitely a traders who probably has mastered it somehow, but in my opinion, it doesn't bring a long-term consistency, right? Same thing is a chart patterns. You probably know these things like a double top, a double bottom, right? Or these head and shoulders, right? Very well known chart patterns, but the thing is that the markets are actually controlled by big players, and they are always looking for the liquidity. So mostly when you see something like this, some kind of double bottom, and then price breaks higher, you can be 100% sure that it will come back down to take the stop losses of these traders, right? Because what's happening in here, you can see double bottom, right? Then you can see breakout. Then the traders entering long in here on the high of the range, thinking that their stop loss will be safe in here, right? However, as I mentioned in here, big players, they see all the books and where is the order, so they will take the price lower and then the price goes up, right? Same thing happening mostly on this head and shoulders, right? So there would be situations when these things can work, but as I say, mostly it can come for this and then drop, right? So these patterns also, I don't think it's a really good way to look at the markets, right? So yeah, so let's go to next slide. So what is a basic of my approach, right? So I am actually defining the liquidity of the markets, which I will show you later how it where. Also, I'm looking obviously on the top-down analysis. I'm always analyzing higher time frame from the weekly, daily, 1 hour and 5 minutes, right? Always I'm defining the liquidity zones and imbalances, which is a levels where the real market reversals and the sharp moves are starting, right? So this is what I will be explaining in the next webinars, right? Also, I'm always looking to define what is a potential market profile, right? If we are in the ranging market, if we are in the trending conditions, or if we are around somewhere where the market is reversing. Based on that, I always adjust my trading, right? Also, I'm looking to the COT data, which is a commitment of traders, which gives me the good view of what the market makers are doing, right? And I'm obviously trying to trade with direction with them. Also, seasonal tendencies, which give us a little bit a clue what each currency can do in the specific time of the year, right? Based on the historical data. And what I am doing, what is the most important thing for me is a news calendar, which is not important for me that I would be looking for the economical data to predict the market, but for the potential prediction high of the high of the low of the week and high of the week, and how the price will most likely behave, right? So I'm actually monitoring just 3 pairs for the intraday trading, and for the swing, I'm looking to the little bit more pairs, right? So as I mentioned, I'm following the market makers by watching the commitment of traders data, which is these things where I can actually see what the market makers are doing, right? So here, just quickly on this example, we have the Euro USD, and we can see that actually in the past, this is actually data released once per week. In the past, on the end of the last year, they had a lot of longs in this column, right? And since then they start to close them, right? And they've been building the shorts. So we can see that based on that, that the euro is actually dropping down right now. If you look to the euro, you can see it's going down, right? Also, I'm utilizing the Fibonacci tool for the dealing range and optimal trade entries. And as said, I'm looking for the imbalances, which is a strong candles, right? Which doesn't have a which did not correct that too much, and left this body, right? Because this is what leaves the when this footprint is what leaves the big players when they are trading. So that's what helps me to. And as well, my concept is accumulation, manipulation, distribution, right? So I basically never enter from the consolidation to just break up, right? What I know is that mostly what happens is that when we have consolidation, then we have first we have some, we can have just a little blip up, then we have mostly manipulation, and then price goes up, right? Here enters those who expecting this breakout, right? So yeah. Also, I'm looking for the trading during after the Asian range and the Monday range, right? And I'm using the CLS market timing, which I will be explaining too. This is my rule, and if you write this down and you will apply that, that's what will help you to make money. And if not help you to make money, it will at least save you money, right? So never buy high, never sell low. That's my main rule. And if you take from this webinar just this, it will you are succeeding already. Okay, so yeah, here is how it looks. So basically what I'm looking for is always for the manipulation of the some liquidity zone, right? So for example, in here we had the Asian session rate of the previous day, right? Break, then based on the Fibonacci retracement, looking for the entry, right? Also in here we have a actually the Asian session, then we have manipulation, and then I'm looking for the entry, right? Never looking for the entry just from the consolidation and then price to going up, right? That's actually not happening too often, right? Obviously, here we have the manipulation of this high, but price did not pull back, right? So no trade. Again, down here, we have a Asian session price manipulating down, and then we have a pullback, right? So that's something, some kind of just to view how my trading looks like. If we look at it a little bit in deeper, again, we have a accumulation. I'm sorry. Basically, all my trades looks very same, right? I'm trading 2-3 setups, and it always looks same. So again, accumulation, right? Then remember, never buy high, never sell low. So it means that if we have a consolidation in here, which would be in this case accumulation, then I would not be ever buying the breakout in here, right? Why? Because it would be buying high of this range, right? So never buy high, never sell low. Same thing in here. Look, price going down, breaking lower. If you sell here, sooner or later it will take you out, right? So never buy high, never sell low. In here, what I do, I wait after this accumulation is broken down, then waiting for the strong candle, right? With these strong candles like this, break of the structure, pull back, and then I'm looking for the entry, right? So that's how it looks. Also similar case, right? No rate, no trade. That means if the any side of the of the accumulation was not traded, I'm not entering never in this in the consolidation phase, right? So always leaving it to drop lower, right? This is always also looking on the based on the context, because currently we are looking to the 5 minute, and it depends where this on the bigger picture where it is actually happening, right? So obviously if we have a daily market going up like this, then if I have a drop down, right, I would not be buying for the continuation up, right? So if this situation will be on the top after the big trend, right, or on the Thursday, Friday, when the whole week market was kind of trending, obviously I will not be buying this, right, expecting to going up, right? But that's all what I will explain later, right? Here is another example. This is what as I said, that I'm using a CLS timing, which means that mostly on the Wednesday and Tuesday is a created high or the low of the week, right? So we had the market trending up, right? It was taking out a lot of previous days highs, right? Then it start ranging on the Tuesday, right? Taking out a liquidity again. Remember, you have accumulation, right? Manipulation, break lower, then a retracement, and price dropping lower, right? So this is kind of all the trades. My trades look similar, right? As also here you can see you have again accumulation, manipulation, but did not get the pullback, right? So we will not be successful every time. Obviously, sometimes we lose as well, right? So in this common journey with our common journey with the 360 Capital, I will teach you how to start trading, right? How to finally start and trading. Also, in the next webinar, next Thursday, I will be telling you how the markets really works. What is the market mechanics, right? So after the next webinar, I'm 100% sure that you will get informations which you probably never heard before, and I'm sure that this will already improve the way how you are looking to the markets, right? In the third webinars, we will be looking to the market liquidity. Here I see I got the mistake typo, sorry. I'm not English native speaker, so sometimes I write the mistakes. And how to follow the market makers, right? In another webinar, there will be high probability institutional levels, and then your trading life, trading style, right? Because each of us is obviously different person, and we have a different lifestyle. Someone wants to be a swing trader, someone wants to just open the chart once per week, set up some trade, look at it time to time, you know. Someone will be trading intraday. That's what I'm doing. So I spend maybe 4 hours by trading every day. Someone wants to be scalper, right? So in here we will look what will be suitable for you. This what would be in the beginning. That's everything the same, right? Then we will decide what will be for you. Then based on that, you will actually choose your time frames, which has to be in the confluences together, and we will learn how to do top-down analysis and trading plan habits. Then I will explain a swing trading strategy, then intraday strategy for the London and New York, and I will show you 3 trading entry methods. Yeah, so but if you look at it, if you give it a time, and if you really will take it seriously, I think after these few webinars, I cannot say that you will already know how to trade, but you will know how to look at the markets, right? Then obviously everything will be up to you, how you will work with this information, because Yes, I can explain, I can help everything, but everything is mainly on you because what's most important in the trading is to do back testing and forward testing. So you know the strategy, you trust it, you have your statistics, and you know what to do when you lose the trade, that you will not jump to another strategy, right? So you need to have your statistical numbers. So I will teach you how to do that. All right, so give me a second. So let's start. So in this webinar, we will look how to learn trading, right? So becoming a trader is obviously similar like to play a guitar or do any sport, right? If you decide to trade just for that you might lost the job, or you thinking that, okay, I will try trading, maybe I will make some money before getting some another job. I can tell you straight away that you will most likely not succeed, right? Because trading, it's really competitive industry, and it should become your passion and your lifestyle, right? So if you're not really committed to succeed, then maybe it's better not to try even, right? If you just want to try, then I can guarantee that you will not succeed. Anyway, so next thing what is important is to actually do the things, right? When what I will be showing you in these following webinars, as I said, it's all up to you, right? You can watch the webinars, but if you will watch it and enjoy it just like Netflix, then you will not do anything. You must be knowing and you must be doing. So it will be important to write the notes, right? Then what I've been explaining, you should go to the charts and really test it. If what I have tell you, if it is there and if you are able to find it, right? So yeah, so you will accomplish this skill just by giving it time and dedication, right? So also you must have a big long-term plan, right? You need to do small, consistent, achievable steps every day and get better by 1% by day, right? And don't skip any topics. I see a lot of mistakes I got here in the typos, but I'm sorry, I will fix that later. So yeah, long-term plan, long-term view. I think it's very important because many traders, and I've been doing it also. You start learning trading. You find some strategy, right? And you didn't do the tests. You don't have your statistic. You start to trade it right away. You know, once you win, then you get 3 losses, and then you jump to another strategy, right? So have a long-term plan, and don't be expect to become a trader after this webinar, 5 webinar series, right? You must have a long-term plan, and slowly you will success, right? You will reach the success. It's the same. It's becoming a trader. It's the same like becoming a doctor or lawyer, right? These people must study for 5 years, and then they can become really professionals, right? And in the trading, it's the same. I don't say that it takes 5 years. I think in the learning the materials, then applying it, training your eyes. I think in a 1 year, it's possible to be really profitable. But it's 1 year is for someone also the long-term plan, right? So don't wait. Sorry, don't wait for the perfect timing and just start, right? So yeah, imperfection is actually normal in the trading, right? You must be consistent, and this consistency will make you go and fulfill your brilliance, right? This is really important. What I mean with the consistency also in this learning, right? If you have a time to do, if you really committed to do it, I suggest to do a 1 hour a day, right? If you have a job, do a 1 hour a day. You might thinking or saying, oh, I don't have a 1 hour a day, so maybe wake up a little bit earlier and give it 1 hour a day. It's better than just trying to study hard on the weekends, 10 hours on the weekends, right? This 10 hours on the weekends, it will exhaust you, and then into another week you will forget it, right? So give it 1 hour a day, 1 hour a day, right? And just get better by 1% when a day. It will all adds up, and you will get better, right? Also apply this Chinese approach, Gagbaru, and have a spirit to doing everything in your best, right? Try to do your best, be patient, be consistent, and yeah, this will take you through tough times, right? So definitely consistency is a key. Give it a bit every day instead of trying to do everything at the one time, right? Because the brain needs to consume this information and needs to consume and learn it, right? And then before you go to another topic, just repeat what we've been doing the last time, and then go to another topic. Okay, so as said, mindset is everything, right? Especially in the trading. Trading is a reflection of our lives. So however you do everything, same it will be in the trading, right? So if you are, if you are lazy, it's trading simply is not for the lazy people. It's a lot of hard work, right? So if you are lazy and you know it's your weakness, try to find a way how you can beat it, right? So have your life goals, write them down and visualize them every day. It's also important because trading is actually the journey into meet our life goals, right? Whatever is your goal, and trading can help you to reach it. But write it down, have it before you, see it every day, right? And it doesn't matter what is your goals. It's only your goals, and no one can take it from you, right? Be patient because the results will mostly not come as fast as we expect, right? Everything in what worth in our life costs time and work, right? Only strong decisions to not give up until I succeed, right? Have such a strong decision. Not if you are just trying. I say again, if you're just trying, maybe don't do that because you're really wasting your time. And after 2 years, you will lose a lot of money and you will give up anyway. So have a decision to really change your life. Have a strong decision to meet your life goals, right? Give it a time, right? So only purposeful, patient, and be purposeful, confident, and organized, right? Have a strong mind and know your weakness. Leave your comfort zone and don't be lazy, right? And also, this is very important. Don't ask others for the permissions, right? Trust yourself, right? Many times when I was speaking about with someone that I want to be trader, this and that, everyone will be telling you, no, you will not do it. I try it, it never worked, right? And yeah, it's never worked for them, right? But it doesn't mean that it will not work for you. You must trust yourself. You must really commit into it. And this decision to becoming a trader is a decision for the continuous life education, right? I'm trading almost 10 years. It's actually this year it's going to be 10 years, and I'm still learning. I'm still learning. All right, so yeah. So what is a goal as a trader? Many people think it's to make money on the markets, but it's actually not. The goal as a trader is to create a simple system with fixed criteria, narrow it down to each element of the trade setup in order to maximize odds in your favor and eliminate emotional based decisions, right? Making as much as possible. So yeah, making money, obviously it's important, but what is actually our goal is to create a system which we can follow every day, which we know that it's giving us our edge, that it will basically, that if the trade is not worked, that it will not take us from our journey, right? So that's what we are going to do on this webinar series. We will be creating our system, we will be testing it, we will be working on it, and as well on our workflow and how to put it in our life, right? So yeah, this is, in my opinion, goal as a trader. The money comes later when we consistently follow our trading system, right? Also, many people think that the consistency in the trading means that our equity is constantly growing. Obviously, this is the consistent growth, but also the consistency is to executing our trades even when we are in the losing periods. And I can tell you, everyone time to time meets losing periods. There, I don't know any trader who has 100% success ratio. And if anyone telling this to you, that's a liar, right? So what is our trading enemies? Actually, I used this picture where is like this guy with the mirror, and it's true because your biggest enemy is actually you, right? Why? Because of the false expectations, right? Don't expect to get rich quick, right? Definitely trading is not a tool to get rich quick, right? Also, next thing is greed and fear, right? This will take you away from executing your plan. Why? Because if you're greedy and you trading with the large positions, you will be fear to hold the trade, right? If you open big lot size, market goes in your way, right? All right, now you're making 1,000, 2,000, 3,000, and then it's going to back, and you will do what? You will close it because you don't want to lose it, because that position is too big for you. And then what happened? Break down, right? Also, if and it comes together, right? If you greedy, you will have a fear of loss. Your position sizing must be in the correct risk management. So each trade is for you with the same value, same size, same risk of the account, and it actually for you should not matter if you win or not, right? So here, entering trades with outcome based on expectation that you know what's going to happen, right? No one knows what's going to happen next. You have only the higher probability that one thing happens first than other, right? Never you have 100% what's going to happen. Another thing, not treating each trade same, right? Betting too much on one trade. Okay, so there's sometimes setups which gives me a kind of thinking, right? Okay, this one will be good one, right? But anyway, you should not put bigger lot size, bigger risk to any trade, right? Taking trades, and this is taking trades based on someone's analysis from the social media. This is actually the biggest mistake to do, because when you're doing this, you actually many people doing this because they do not want to they are not ready to take a responsibility for own trades, right? For own trading, for own decisions. And then you're doing based on someone's, and even if you for time to time profitable, what you gonna do when these people will disappear, or when he's gonna be losing, right? You not growing when you trading based on such a thing, right? And this is definitely killer of the traders, and it comes also with these false expectations, right? So comparing yourself with false social media traders, right? If you look to the Telegram, there will be traders who will be showing you entry and straight to the target, right? And false screenshots, also rented cars, rented BNB houses, to post how rich they are, how they're making it with the trading to sell the courses. I suggest you don't look at this, because very few of these people really have this success, right? So, okay. So yeah, as said, it is all in our head, right? I'm always entering the trade with these five quotes, right? So anything can happen, right? If I'm entering short, as today I was entering short, I knew that I can lose, right? You must have such expectation. Also, you don't need to know what is going to happen next to make money. You only need to know what is your edge, what is your setup, and you need to execute it. Then that's all what you need to know, right? There is a This is very important because there is a random distribution between wins and losses for any given set of variables that define an edge, right? So for example, if I have my some trading setup, as I said, that I want to see a rate of some consolidation, I want to see a rate, then some pullback, and then I'm shorting, right? So that's my setup, right? Let's say I know based on my statistics that from the 100 trades, I am able to win a, 65 trades, right? That means that from 100 trades, I have in average 35 losses. But the distribution between wins and losses is random. I do not know if I started trading right now, if I get these 35 losses right now, 35 losses in a row, right? So I need to know that I can get quite high number of losses until I win, right? So that's why I need to have my statistics, which will keeps me to continue with my strategy, right? Also, my edge, this is what I draw with this setup, which I'm trading, is nothing more than indication of a higher probability of one thing happening over another, right? It's nothing more. It doesn't mean that I control market. It does not mean that I have a holy grail. Nothing. It's only a higher probability of something happening, right? Also, every market is a unique, right? As I said, I got some trading setup, something what I'm trading. There will be a days where it simply will not work. That's a reality of a trading, right? So here is a 7 principles of a consistency, and this is a trading book which I recommend to everyone. It's not a trading book about a strategy, but it's a trading in zone from the Mark Douglas. It's a trading psychology book, and I would say this helped me a lot. So here is a 7 things which he in this great masterpiece book he says, right? So this is what every trader should do, right? So I objectively identify my edges, right? You must be objective, and even if you are in some trade or if you think something, always be simply objective, right? Always before entering any trade, predefine risk of every trade, right? Don't do that after you are in a trade. Completely accept the risk and be willing to let go from the trade, right? What does it mean? If I enter a short and the trade does start to look that it's going against me, right? So what I have to do, I must be objective, right? And I completely accept the risk. So if I have my stop loss in here, right, I would not be closing the trade in here because I entered here, and this is what I have entered with the trade, and I completely accept this risk. Also, what I should not do, I should not move the stop loss above here because this is how I entered it with the predefined risk, and that's what I completely accept, right? Also, I have to be willing to let go of the trade, right? So if the trade is still going down and you can see that it's on the end of the day and you think your target would be here, and you start some consolidation and potential reversal, simply close it, take it, right? So you should not be married to your trades. Also, you must accept the risk, right? You should act on your edges without reservations and the hesitations, right? So this is important. You simply need to be emotionless, and when there is a setup, simply execute it, right? It's easy to say, but it's difficult to enter when you have, let's say, 3 losses in a row. Then you have a 4 trade, there is a setup, and people hesitate, right? Because it didn't work last time 3 times and you don't execute for the 4th time. But again, this is very important to have your statistics and knowing that if you lost 3 times, you lost, let's say, if you've been risking 1%, you lost 3%, right? But if your risk to reward is 1 to 3, you should know that with this 4th trade, if it's gonna be correct, you will completely recover this loss, right? I pay myself as the market makes money available to me, right? Not leaving money on the table too much. As I said in here, let's say the trade is going on, right? Here is my target and I see it's not going there. Well, simply take it. It's always better to take the money from the table, right? I continually monitor my susceptibility for making errors, right? So if you're doing the errors, it's important to have a trade journal and writing it down, right? So for example, if you miss a trade, you journal it, catch it next time. If you have a loss, journal it, next time avoid it, right? So the journal is the most important thing of the trading, and it helps you to eliminate the errors, right? But I will be speaking about the journal a little bit later. And yeah, last one is I understand absolute necessity of these principles and consistent success, and therefore I never violate them, right? So I suggest you to screenshot this, or you can actually later replay this webinar again. So, all right, let's go to another one. This is very important in my opinion. I hope it's not boring for anyone. I really think that this is a very important topics before we get into the strategy, right? So backtesting, very important thing. Before we get into the trading, before you start to trade live, you should do a backtesting, because yeah, if done wrong, it gives false sense of the confidence. And we should also backtest with intention to develop a trading plan, right? To know what is our risk per trade, what is our statistic, what should be our average stop loss, right? The trade management, how we manage the trade, if we where we move the stop loss to the break even, or if we do some partial close, right? This is all what we should know before we enter the trade, right? So as you can see, the entry is here, right? So you should know your risk, where you put your stop loss, where you will close the partial, or where you will move the stop loss to the break even when the market reach some point, right? And then you look for your entry NTP, right? So we also should be testing all the market conditions, trend, range, and reversal, right? What's the biggest mistakes of all traders? They find out some strategy, right? And then they test it in some market periods where the market was ranging, but then some big trend comes like this, right? Is often happening with the martingale strategies, right? And then something like this, right? Again, and yeah, they've been testing their strategy just here, but not in the trend, right? For example, if this is a daily chart, right? So we should know how our strategy performs in trend, range, or the reversals conditions, right? So we need to define a risk for each of the market profiles or these conditions, right? Also, what is very important is not just to look back in the charts to see how perfectly these trades would be working, and how it will be great, how much money we will be making, but also we should try to disprove our edge. We need to find when it fails, and define when the setup has a low probability. That's another part of the backtesting, right? So we should know, we should find a lot of these data when it doesn't work, and we actually need to have it in our journal, which is our journal is like a Bible, right? Also, we has to be honest with our modulated statistic, because it's our business, right? We need to have at least, this is at least, right? I recommend to have at 200 tests or even more, right? Because for example, as we can see in here on this statistics, right? When you start to backtest some strategy, here you have a random outcome of your trades, right? Obviously, it would be best if we get this outcome, right? But also, as you can see, here is this, I think it's a gold color or yellow. You can see after the 100 trades, this strategy actually, this outcome of trades was a little bit in the drawdown, right? But in the long term, it wake up and it continues up, right? So this is actually the very important picture. This is uh, from the equity simulator where I have actually set up my where I have set my success rate and the risk to reward and the risk per trade, right? And here actually when starting on the 1000 account, here we can see how where I will be after the, let's say 100 trades, right? So after the 100 trades, which is in here, if I get the profitable trades uh, more on the beginnings, I would be my equity will be going up, right? But as said, the distribution between wins and losses is random, and it could also be like this, right? So that's why it's important to stick to the plan, because if I know my success ratio in the after the 100 trades could be let's say around the break even or in the decent loss, but if I still continue consistently execute my trades and I have positive winning ratio, positive success rate, I should always be profitable, right? All right. So here is just an example of my back test, right? So it's obviously on the, everyone, but what data I've been collecting when I'm doing my back test, I mainly trade the euro dollar, right? And I write down in which session, if it is in the London or New York, where was the trade, what day it was, if it was sell, buy, what was the risk reward, if liquidity was taken, how many pips, right? What type of entry from my free entries, if it was profitable or not. Also, I collect the all the trades, the screenshots in my PowerPoint where I can go through them, right? So that's just a tip, right? But this is definitely what I think is very important, because many people start to trade before they even try it to do and having and collected these statistical data, right? Uh, I don't understand how actually anyone could even deploy the money to trading when don't know what would be statistically happening on the potential trades setups which they want to trade, right? So this is very important, right? And right now, this is a journaling. In my opinion, this is a most important thing of every trader. I honestly must say that I was not journaling in the beginnings for the few years, and it was my biggest mistakes. Once you start to do it, you will not be just a trading and repeating the mistakes, right? Once you start to do a journaling, it will fasten your learning process and understand your psychology, right? Uh, it will helps you eliminate mistakes, the early entries, right? Closing the trades early, having too big targets, right? Or moving stop loss to the break even too early, or not taking profits, right? All these things, I'm 100% sure this is happening to all of us as a traders, right? But if you don't journal it, if you don't write it down, and I don't say it has to be by hand or it can be in the computer, you will simply go home, or if you're trading from home, I'm trading from my office. Uh, if I don't journal and I make mistakes, I will go home and say, okay, today I should close this trade earlier, or I shouldn't entry there. I should wait more, right? And always will be repeating these mistakes, and still repeating them, right? But once you start to writing it down, and then you go back in your journal and say, okay, here I entered earlier, here also, here also, here also. Then you find out that you actually making some mistakes and that you have to change some things, right? So this will definitely helps you to explore repeating patterns and repetitive situations. This is actually how I developed my strategy, because I find out that something is happening in the specific time after something like that, right? So trading journal, most important thing I would say in the trader's journey. I don't know any trader who is profitable that doesn't have a trading journal, right? So how to journal? Basically, you trade, you journal, you learn, you analyze it again, you adjust, and then you trade, right? And you getting better. If you don't do this and you just trade, you simply do somehow random, you will have a random results, right? So basically, if you win, you journal it and you will repeat it. If you lose, you journal it, you analyze it, next time you avoid it, right? Or maybe you will make some mistake again, but I guarantee you that if you journal the losing trade 3 times, your next trade will be better. If you miss the trade, you journal, you analyze, and you catch it next time. This is only the way how you improve yourself as a trader, right? So basically, the mistakes are acceptable when lesson was learned and avoided next time. And in the trading, it not always take just a next time, but maybe few next times until you master and you develop your craft really to be great, right? So yeah, this is a last slide. We have actually another 8 minutes, so then we can look quickly to the charts. I will give you, it's obviously up to you. I think here is what you can take from this webinar, slightly some homework, just to think about your life, right? And think where you want to be in the 5 years. Think where you want to be in your 5 years, how the trading can help you. What is your why to trade? Why you want to trade, right? What success in trading will bring to your life, right? So think about it. Why you want to trade? Because if you know why and when you want to be in the 5 years, in those periods when you're losing, this will help you. Write it down. Write it down where you want to be in 5 years. What is your why, right? What success it will bring to your life, right? Anyone's goals, it's just your goals. It can be a Lamborghini, it can be whatever you want to, right? I also wanted to have a supercar when I was younger. Now when I'm father, different things. My values has changed, right? And I'm actually looking more for the freedom and the traveling than having a cars or trying to impress some other people. But anyway, then if you have this and if you write it down, I suggest you to put it somewhere where you can see it every day. You don't have to rewrite it every day, but where you see it. Also, plan when you will be learning and trading and add it into your diary for the next 3 months, right? So you need to actually you need to establish the achievable process, right? Daily, weekly routine, which you can stick to no matter what, right? So, okay, watching today's webinars, it's about how to learn trading, how to do it. But if you really want to take it seriously, plan it into your diary. What I'm actually doing, let me show you. I actually have my own diary, and I always have. I'm writing everything in the hands right now. I don't know if you see it, but you probably don't see it correctly. But I have in my diary exactly written what I'm going to do and when I will trade. And when I got my trading time, I turn off everything, all the social media. No one can contact me, nothing, right? So I completely focus on that. And if I'm learning on something, if I want to read a book, anything, I got it in my plans, and nothing can takes me from that, right? So you need to plan this. You can say, okay, I will be learning, let's say 1 hour a day, and I will be doing it on the mornings or after the work, etc. For me, it works best to do it on the morning, but not everyone is this early bird. So yeah, you need to simply, if you want to achieve this new skill, you need to implement it into your life and really take it seriously and uh, do work on it every day, right? Also, you need to know what is your weaknesses, right? If you if you're lazy and watching a Netflix, then probably that's the time which you should give to the learning and trading, right? And yeah, write your weaknesses. Some people are not patient enough. Some people are not consistent in their work, right? So yeah, uh, think about how to eliminate this, right? Basically, becoming a trader it's being really very organized and consistent and really purposeful in your goals, right? Also, think about how you will execute your trading journal, right? So it's really very important, right? So I would say if just as I said before in the slides before, it doesn't have to be perfect. Just start somehow. You know, if you will be doing a screenshots and doing the annotations to the charts, this happened here, this happened there, this day, you know, that day, writing into your journal and that. So then yeah, that's the start of your journal, right? Start it somehow. It's definitely very important. And also, as the last thing I want to say about this psychology, it's all about you, right? So do it for yourself to be happy, right? Strategy doesn't create a trader, trader create a strategy. And all of these, what I have said today, I think it's all important. And I think that it's the most important before even you start to trade, right? Because you need to have a long-term plan. You need to know how to create actually your learning process and how to continue, right? So yeah, if you don't know, this is a Sun Tzu, which was a Chinese war general, and he wrote a great book, Art of War, right? Okay, so let me show you the charts for the minute where we are right now. And actually, I wanted to show you this, right? Sorry, here. Here is actually the last slide when we will see each other next times, right? So today is a Thursday, and Thursdays will be educational webinars, right? On Sundays, I'm always preparing weekly outlook analysis, pre-recorded video. So on the Sunday, you can go to the YouTube of the 360 Capital. There is a weekly outlook from me. And the Tuesday, we review the trading setups, right? So this is what I already did. And here is actually what I've been planning this Tuesday, where I was actually thinking that, for example, here we have let me zoom, right? So here we have for example, USD CAD, where I was expecting the price to drop lower, you know, take this liquidity and then going higher, right? And same thing, you can actually go through this webinar. I have a little bit touched in here my strategy and what I was a little bit talking about today. So this also will help you with your trading journey, right? So yeah, let's look how actually this what I was planning in here. So this is what is this one? This is a USD CAD. Yeah. Yeah, here, for example, where was it? In here. Yeah, here is the pound, which I've been expecting to going higher, right? And then drop. And also, I'm not showing you just to prove that I was right, right? And here is a euro, where I was expecting price to going a bit lower and then higher into this zone, right? So let's look how it looks like right now, because it's important. I want to show you this, right? And we want to see this one here, right? So this is a euro. And so we have how much time we got? So I don't want to bore you too much. So yeah, I will give you a bit, just an explanation what was going on in here. Here is the euro, and here was actually the today's setup, right? So what actually was happening in here? We had a price consolidating in here. Price has been consolidating in here, right? Then it just swept a little bit this high, dropped lower, right? Made a pullback, and then we had a sell-off into the previous day's low in here, right? And yeah, so if you look to that if you look to this planner review from the Tuesday, it's actually some kind of what I was expecting, and there you will see also a bit explanations of these accumulation, manipulation, distribution concept, right? So that's what was there today, and I had actually this trade, right? So we can see that the price has manipulated through this high, right? Breaks lower, retrace it, right? And then I close the trade in here, second part in here, right? Obviously, here you can see if I hold it a little bit longer. All right, anyway, so this is it from me, my friends. It's 1 hour. I hope that it was not boring for you. And I will see you it's a Thursday. So on the Sunday, you can expect a weekly outlook, and then Tuesday we will look to the markets, we will look to the setups, right? What is possible to trade, and on the next Thursday we will look more into the deeper into the markets. There we will not be talking more about a psychology. Hope you took from today something, and it will be about a trading, how the markets really works. All right, my friends, take care.